Alright guys, welcome back, and a happy Eid to those who are celebrating. I've got quite a few slides to get through today, and with the Eid celebrations over the weekend I've been very busy with family, so I'm going to spare you the monologue today and jump straight into the economic calendar. As you can see, Monday, New York session, USD high impact news. Tuesday, New York session, high impact news. Wednesday, CPI for the pound. So during London. Thursday, New York session, monetary policy and bank rate votes for the British pound. 8:30 a.m. unemployment claims for the dollar index. We've got a lot of news on Friday in terms of manufacturing PMI. So we should expect a lot of volatility towards the end of the week. Moving on, we have the dollar index and daily time frame. Now, we were aiming for the minor buy-side liquidity above this swing high last week. I said that would be a likely draw on liquidity next, and we did in fact hit that. If you recall in one of the previous mentorship videos, I think when we were around here, I said we were likely to sweep the sell side liquidity below this swing low and dip into the opening price of this down close candle that sat at that 25 DRT level. Now, on this chart with TVC, we obviously left that open and price ran away. Someone on Twitter actually pointed out that we had a divergence on the underlying futures contracts for the dollar index. We did in fact dip into the opening price of this order block and sweeping the sell side liquidity below these lows before running higher. Based on that, I would like to see the dollar continue higher to run the buy side liquidity up here and dip into that liquidity void. I like how we've dropped lower into this order block and completely rebalanced this buy side imbalance and then ran away, breaking back above this swing high. Currently closing below the 25 DRT level. But again, as I said earlier in a previous lecture, when we didn't break down the way I would have liked to have seen price break down when we were over here, I said we're likely to go into a seek and destroy. And that's exactly what we have seen. Now, again, in a previous lecture, I was speaking about how we trade inside of a consolidation. And I mean, this is a beautiful example of how DRT levels really operate in the market. We identified that this was the dealing range high and this was the dealing range low. The reason being is this high swept buy-side liquidity to the left, and then we've continued lower, creating the dealing range high and the dealing range low down here. Now, you can see that we had these relative equal lows that sat inside of an extreme discount, and we swept that here, digging into this terminus gap, which sits at the 25 DRT level. I also spoke how we left this buy-side imbalance open over here, so we didn't completely close it. And this is very typical in seek and destroy. We then ran higher, sweeping the buy-side liquidity above these relative equal highs, again into our breakaway gap, which also sits around that 75 DRT level. And again, we just come shy of completely rebalancing this sell-side imbalance. Why does this happen? Because the algorithm is leaving it open so that it can come back to it at a later date, right? Because its two primary functions is to run liquidity and to rebalance an efficient price action. So what does that leave us? Well, down here, we have left sell-side liquidity below this swing low, and we've ran lower to completely rebalance that sell-side imbalance. Notice how we've accumulated inside of an extreme discount below these lows, and then price really rips higher, back into an extreme premium and sweeping the buy-side liquidity above this high and fully rebalancing this sell-side imbalance to the left. Again, there's been an accumulation of shorts and order pairing with the buy stops above these relative equal highs, and then price moves from an extreme premium all the way back down to an extreme discount. It actually comes just shy of the midpoint of the extreme discount region and into this down close candle as an order block, which also overlaps with the initial gap that was created inside of the initial dealing range. And the consequent encroachment of that level also overlaps with the midpoint of that extreme discount. Price then runs higher, and notice here that it's not getting above the equilibrium level until this candle here, The following two candles, you can see how we've wicked back down into a discount, but prices failed to close back below the equilibrium midpoint. And we found support at the mean threshold of this last up close candle, which will act as a breaker. Where does this sit? Inside of the measuring gap, which we find at the midpoint of the dealing range. Price then runs higher and breaks through the 75 DRT with a close above it. If we look left, we have that breakaway gap sat at that 75 DRT level. Touch it perfectly there, find support, and then run higher to that minor buy-side liquidity pool that we outlined last week over here. So now we've cleared the major buy-side liquidity pool inside of this dealing range, and we've swept the major sell-side liquidity pool below the dealing range low. I'd prefer price to stay firm up here. I feel like we've done the majority of the damage, and looking at the futures chart for the dollar index, we've already swept all this liquidity. So I would like to see this region ideally support price. We have this breaker over here, and we also have this buy-side imbalance. And I'll explain the reasoning why I think that we may want to slip lower, at least initially, is because of what I can see between the euro dollar and the dollar index. The first thing to note is how we've swept the buy-side liquidity above this swing high, but we haven't closed above it. Whereas on the euro, we've actually closed back below the equivalent minor sell-side liquidity pool. And we've dropped into the 25 DRT, so we've touched into an extreme discount relative to the dealing range. Whereas the dollar index is failing to get into the extreme premium of this dealing range. So it could be showing weakness at the minute. We have this inverse fair value gap, again, that sits at that 75 DRT level, and the equivalent inverse fair value gap at the 25 DRT level on euro. Now, again, price hasn't closed back below this level, and we've repelled this, closing back above this inverse fair value gap on the euro, and obviously closing below this inverse fair value gap on the dollar. Last week, I did point out that we were likely to travel higher, closing in this gap, and then continuing lower back below the sell side liquidity pool, below the swing low. We did, in fact, see that. There's a really nice reaction there of the 75 DRT level. Bodies closing below that. We did wick higher back into the premium end of this inverse fair value gap, but we have this high, low, and this higher high over here, making this down close candle our breaker. This breaker overlaps with this sell side imbalance, which also sits around that 75 DRT. So we had a number of confluences there which would push price lower, and you can see how towards the end of the week we declined. If we compare the euro with the British pound, you can see the pound over here is really failing to get any lower. Notice how we have this measuring gap here at the 50% DRT level, and look at all the support that we found here. Look at the body supporting price, and then we've run away from that level. We have this buy-side imbalance, and again I said I'd rather not see price come into this and stay firm up here. We do have this inverse fair value gap, again at that upper quadrant of the dealing range. So if we are to travel lower, I'd like to find support over here for the pound. We are also inside of these two consecutive up close candles as our bullish breaker, and the mean threshold, we've tapped that nicely over here on Friday. I'd like to see more symmetry in the market, if I'm being honest at the minute, which is why I don't really want to call longer term price action. Really, when you're trading this, you want to trade the lower time frames, plot your DRT levels, and then look for extreme premium, extreme discount, and look for the liquidity pools and the inefficiencies within those dealing ranges. Ideally, 4-hour and 1-hour liquidity pools is where you want to target, because we could stay inside of this consolidation at the minute. We don't know, right? We do have the sell side liquidity below these lows down here, and we've already run the buy side liquidity up here. So if we get back below the inverse fair value gap, then I'd anticipate this to act as resistance, and this down close candle inside of that fair value gap would become a distribution block, sending price lower back below these swing lows. So that'd be something I'd be looking for if we are to break down. But again, I'm going to see what the dollar wants to do. So there's a whole lot of things that you have to weigh up, right? And this is why Forex is quite difficult at the minute. I mean, we had really nice price action over here, but this is very difficult to trade. Choppy up and down price action. The reason why we're seeing the British pound show strength versus the euro at the minute, as you can see, we've already run the major buy side and we're consolidating around the extreme premium, where the euros dropped lower and we've touched into an extreme discount, is because of what we can see on the euro pound, right? So the pair euro pound, and with euro being the front pair, as this drops lower, this is suggesting that the euro is weaker than the British pound, and that's signified by this drop lower. At the moment, with the market conditions, don't overstay your welcome. So when you have a trade on, don't look for home runs, right? You want to look for low-hanging fruit objectives. If you're up 2-1, 3-1, close your trade, right? This isn't the current climate to hold on to the trades and try to squeeze out as much as you can, right? Be sensible. I know you get excited when you're in profit and you feel you want to milk it as much as you can, right? We've all been there, but these aren't the conditions to do that in, right? Anyway, moving on to the euro dollar. So this is last week's price action on the hourly time frame. Now I'm going to quickly go through what we have here. We have the new week opening gap on Sunday, and this is delineated with this blue box. We obviously have the days of the week here delineated with these vertical dotted lines. We've got the 75 DRT level, the 50 DRT level, and the 25 DRT level from the higher time frame. We have this daily inverse fair value gap and the minor sell side liquidity pool that we were reaching for last week. This dotted line here is CPI, and you can clearly see how that was the manipulation for the week on Wednesday. So let's run through what actually transpired. On Monday, you could see that we had Monday's high ran here on Tuesday, and we had Monday's low ran here on Tuesday. And we ran that minor sell side liquidity pool to the left, leaving this down close candle. Yes, the consecutive down close candles, but this smaller candle is inside the range of this larger down close candle. This down close candle sits at that minor sell side liquidity low, and obviously below the lows on Monday. So you can see how we were consolidating around the premium high of the order block and the 50% DRT level. On Wednesday, price runs higher after CPI, digging into this sell side imbalance left on Friday. If we grade this range, you can see that price didn't want to close above the first quadrant of this sell side imbalance. I have a separate teaching about this on the YouTube channel if you want to go and check that out. The clue here is that we didn't want to close back above the lower quadrant, so this suggests weakness. We couldn't even get to the consequent encroachment of this sell side imbalance, and then price displaces lower over here back through that 75 DRT level. And then look at the price action over here around the 75 DRT level. We go into this consolidation, but if you look closely, what else can you see at this 75 DRT level? Well, if you look left, you can see that we have this small gap that also overlaps with that 75 DRT level, and look at price being held here like a brick wall. This is also a balanced price range. We have sell side delivery, so we've repriced lower, then we re-delivered back through that range, and then we rebalanced through this range. So this is a very strong level of resistance. And just look at the bodies over here. This is telling you the story. This is an algorithmic signature for smart money. It's giving them all the time in the world to get into it, and then one final time over here when time aligns, right? But I'll leave that one for your studies. Price reacts off that balanced price range and then drops lower, closing back below this swing low, leaving this gap, which is going to become what? A breakaway gap. But I'll get into this in a second. Again, we close back below the 50% DRT level. And what does price do? Goes into a consolidation, again at that 50% DRT level, just like we had here on the left. Let me zoom in here on Thursday and Friday's price action. And I want to bring your attention to this swing high down to this swing low. So this is going to be our dealing range. Notice how the 50% DRT level or the equilibrium overlaps with the 50% DRT level from the higher time frame. Note where that breakaway gap formed at the 25 DRT level. Then we have a measuring gap at the 50% DRT level. And again, look at price failing to close above that 50% DRT level and back into this sell side imbalance. We have institutional order flow entry drill here that goes above this high, and just dips into the sell side imbalance before repricing lower. Notice what we see at the 75 DRT level. We have this terminus gap. Currently, price is consolidating inside of this area. I like how we have these 3 consecutive down close candles as a potential order block, and we're finding support currently above it. We have equal highs over here, which sits above equilibrium of the dealing range high to the dealing range low. And then if the dollar really does want to drop, then we have all the buy side liquidity above these relative equal highs and these equal bodies up here, again with this sell side imbalance to the left. But this for me would be a short-term draw on liquidity. I am also noticing this small buy side imbalance that sits inside of the 3 down close candles over here. We may want to dip into this and then run higher. I do like how we've also ran above this swing high. So now we have a low, high, lower low with this up close candle here that will act as a potential bullish breaker. So there's a few levels that overlap here as Confluence from the higher time frame down to the lower time frame, and we've already dipped into the 25 DRT level over here. Obviously, if this gives up the ghost, as ICT would say, and it drops lower, then I'm going to sit on my hands and wait for more information. So it'll be interesting to see what transpires this week. Of course, next week we'll review, again, price action, and I'll give you a little bit more study points and observations that we have seen throughout the week. So I hope you guys have found this one insightful. If you found this useful, then please drop me a comment below. I always value your feedback. And hopefully I will catch you again in next week's lecture. Take care, guys.